Hello everyone, good morning and welcome to today's lecture. So today we are going to continue audit of banks. Remember in last lecture we were talking about prudential norms. We talked about how to recognize and what are the norms with respect to the recognition of asset as an NPA. Now we talked about when to recognize as an asset, standard asset, loss asset, and SMA 0, 1, 2. So I told you about, asset classification before NPA, after NPA. So we discussed a few things about, prudential norms. Then before that, we discussed about long form audit report, normal audit report, how things are reported. So we discussed the various topics. And I requested you guys, okay, next lecture, our major focus, or in this lecture, our major focus will be the practical side rather than the provisions. Okay, so still I will be covering the provisions, but major focus will be our practical side on the implementation of these provisions. Okay. If you have any doubt at any point in time, you can just post it on the through app or through the portal. I will be taking care of those doubts. Okay. Now, this is how we need to define a particular asset. So just to recap, there are two types of classifications. One is before NPA, one is after NPA. After NPA, substandard, doubtful, loss asset, and before NPA, SMA 01, SMA 0, SMA 1, SMA 2. Okay, that is the classification of asset. Now, this classification is helpful. Why? To identify the provision that is required to be done on these assets. To identify the provision that is required to be done on these assets. So, okay. Now, I'll write category of asset and percentage of provision required. Okay. So first our category, standard asset. Then comes substandard. I'm talking about after NPA. Then comes my doubtful asset. Now, doubtful asset, again, I have three bifurcations based on the period of doubtful asset. That is first secured, in that up to 1 year, from 1 to 3 years, and then more than 3 years. Then I have an unsecured portion in doubtful. Okay. Then I have a loss asset. I'll start the provisioning requirements from below. The reason because so the critical impact and the major provisions, is with respect to the loss asset. So I'll go in a reverse order so that I will be able to make you understand how the gradually we move up and the gradually the provision is reduced. Okay. Now loss asset, as I said, loss asset provision is required at the rate 100%. At the rate 100%. And this 100%, like when the losses is recognized, when an external or internal auditor identifies, or a bank identifies, or RBI inspection identifies any such asset that is to be recognized as a loss asset. So 100% provision of the outstanding balance on that particular account. Okay. Then comes to the doubtful. Now, doubtful, as I said, there are two portions, secured and unsecured. So for secured, the percentage requirement is 25, 40, 100. So up to 1 year, you are required to have 25%. Up to 1 to 3 years, 40%. And beyond 40, beyond 3 years, it is 100%. That is for secured. But if it is unsecured portion, directly I am required to have 100%. Then this is the doubtful. Substandard, I have a 15% without allowance for any guarantee or securities. Without allowance of any guarantee or security. Okay. That is for my substandard. Because these substandards, are done like at a overall level. So that's why, no allowance for the securities and for what you say, guarantees are given. Now that is the total. Now, if there is, substandard asset with an unsecured exposure, if there is a substandard asset with an unsecured exposure, okay, then in that case, that would attract 10% additional. So that you can say it's for secured, and for unsecured, it is 25% in total. So additional 10% you are required to have on the outstanding balances. Then comes your standard asset. Now, so for standard asset, okay, what we need to understand is what is standard asset. Standard asset is something, they are normal accounts. Now, in case of a normal account, what happens is, there different type of accounts require different type of provisioning, because they have a different type of bricks exposure. It's not that, standard is just one thing you apply and close it. It's so you need to apply different type of percentage. So for example, okay, let's say you have a loan to agriculture loans like farm credit, or for agriculture activities, individual housing loans, loans to small and micro enterprises. So farm credits, then housing loans, SME loans, they all together require a provision of 0.25%. Okay, they all together require a provision of 0.25%. Then if you have an advance to real estate sector, which is known as advance to CRE, commercial real estate. So advance to CRE, that is commercial real estate, it attracts a provision of 1% on standard level. Okay. Now, if you have an advance to CRE, if you have an advance to CRE, but that CRE is of residential housing, means it's a commercial real estate. Okay, there is a corporate involved for the real estate, but they are into residential housing sector. So generally, it is known as CRE. Just a minute. RH, residential housing, that attracts a provision of 7.5%. Okay. Same way, you have a different norms. Like for you, if you have an advance for restructure and classified, so they have an they are required to have at 5%. All other loans, a generic category has been provided. So other loans with a generic category of 0.4%. Okay. So that is how the standard assets it is divided. Any doubt till now? Boni, your question, like like without allowances and without guarantee of security, I'll explain with an example. So I have a question, I'll explain with an example. So there are other norms also I'm not discussing over here because they will be there some provisioning of an asset is not only related to what you say a direct application. At times you need to understand what is the underlying asset, what are their norms, and accordingly the provision is required to be done. So for example, let's say if there is a entity is having high level of unhedged foreign currency exposure, there are different provision norms for that. So there are circulars, there are different provision norms which requires you to make additional provision over and above this basis of the EBIT or the likely loss from that particular entity. Okay. Now these provisions that I'm talking about on the standard asset are not required to be netted off while presenting your NPA or the asset. So provision on this particular, I'm specifically talking about standard asset. Okay. Provision on standard asset not needed to be netted from gross advances. Okay, let me explain what I'm saying with an example. But it would be better if I can show you with the appropriate example so that you will be able to understand. So I'll just show you one of the disclosure in the audit report. See, this is a schedule 9 advances. Whatsoever advances are given, but there is a asterisk mark over there. Okay. And somewhere it is over here down here also written that advances are net of provision. So whatever advances you are seeing over here, they are net of provision, or that the provision that we right now calculated, or we saw the percentages of provision, that provision is netted off against each advances. Now the matter comes is, if they are netted off, then how we will come to know that the advance which is not required to be netted off and where it is required to be disclosed. So I'll show you one more schedule where let me present it. So basically in that schedule, it is, detailed bifurcation is given. Okay, what was the advance, how much provision is done, and accordingly, what is the scenario available. Yeah. So this is the schedule I'm talking about, asset quality schedule that they provide in each and every banks, where you will have, standard asset, substandard, doubtful, loss, total non-performing assets. And here, so opening balances, then you have a closing balance, reduction in gross advances. So what they do is, for standard asset, they do not reduce the provision from the standard asset. Okay, see over here, there will be no provision in case of standard asset. Reason, because in standard asset we are not required to deduct the provision to arrive the net balances, but in the case of substandard, doubtful, loss, we are required to reduce the provision so that we can see the closing exposure. So for example, we had the closing balance of NPA 8,392 crores, and in front of that we have the closing provision of 4,165. So that's the net balance that is over here. And if you see the net NPA, total NPA over here, total non-performing asset is net is 4,407, and that 4,407 is then reported in my balance sheet in various respective heads. So you won't be able to find directly over here the number, but like in bifurcations, in loans, in bifurcations, like it will be shown. So this 4,407 is after netting of the balance. Clear? So except for the standard, I net off the provision in front of that particular asset. Any doubt? Any doubt? Yes. So when you classify an asset as a standard asset, that is, the asset is not an NPA. That is standard or performing asset. Yes. So very good question. So there is a question: can a bank decide different provision rates other than the specified by RBI if there is more risk associated with a loan? See, the rates which are specified by the RBI, okay, these rates are minimum rates, you can say, okay. But over and above this, if a bank thinks, no, there is an exposure that they want to cover it, if they think, okay, there is something additional they want to do because there is an exposure, there could be an exposure, so then for that particular thing, okay, bank are allowed. So there's a provision that a bank may voluntarily make specific provisions for advances at the rate which are higher than these rates. It shouldn't be lower, but higher. Okay. And that such policy, that bank, whatever policies bank devising for a higher rate, that should be approved one. Okay, but uh, the point is rates should not be lower than this. Also, there is a requirement for what you say special provisions. Okay, so there is a requirement for special provisions like floating point provisions. So floating point provisions are there in some additional requirements. Now, in those cases also, bank ask, oh sorry, RBI asked banks to create additional provision. So there is a provision coverage ratio, which should not be less than 70%. Okay, so that is provisioning to the gross NPA. So that should not be less than 70%. You need to meet that ratio also of 70% PCR ratio, which is known as generally. Then you have a floating point provisions. There's a different requirement for that. So there are various requirements by which bank ask RBI ask bank to cover their exposure. So any which ways it get covered through various other requirements. But yeah, if still bank thinks, they can go ahead. So from substandard asset, NPA starts. So before substandard, asset is in performing asset. But when I talk about substandard, doubtful, okay, it is NPA. Okay. So that was with respect to the provision calculation. Now, pro percentage. Now let us see one example which will have a clarity, give a clarity over this particular calculation of provision. Okay, so we'll focus as of now for the example number G. This one. Now, bank calculated a provision. We need to verify whether this is accurate or not. During the year 2018, STP Limited, SDTP Limited obtained a loan facility of 6 crore from the bank, which was covered by ECGC cover up to 50% of unrealizable balance. In front of the facility, STB provided security worth of 2.5 CR. On 31st March, the facility was doubtful for 2 years. The outstanding balance on loan was rupees 4 CR and the realization value of the security was 1.5 CR. Bank calculated the provision on this account to the tune of 18 lakhs. Okay, so you need to provide whether the provision that is calculated by the bank is appropriate or not. Sorry, yeah. So you need to provide whether the calculation done by bank is appropriate or not. Pretty simple. What we discussed is the same as of now. Nothing difficult over here. Just give me a minute. Yeah. Calculate and let me know if that is correct or not. I'll give you 5 minutes. Calculate based on whatever we discussed. Okay. Whether this is correct, the provision calculated by bank or not. Come on, guys. Again, I'll repeat the question. In 2018, a company took a loan of 6 CR, which was covered by 50% of the guarantee. In front of that facility, the company provided security worth of 2.5 CR. On 31st March 2021, the facility was doubtful for 2 years. The outstanding balance of loan was rupees 4 CR. The realization value of security was 1 CR. Bank calculated and booked the provision to this account to the tune of 18 lakhs. You need to understand and you need to provide whether this particular provision calculation is correct or not. Okay. 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 So I have received various answers. Let's calculate how it is done. First of all, to calculate a provision, I need to find what is the net exposure for me. What is the net exposure for me? So first of all, what is the outstanding balance on this particular loan is 4 crores. As of now, I'll calculate everything in lakhs. I'll convert from crores to lakhs to, for the ease. Okay. So currently, basically my balance is 400 lakhs outstanding balance. in front of that I have some security. Okay, so I'll first reduce the security value. That is 1.5 means 150 lakhs. So the net exposure, which is unsecured exposure, for me will be 250 lakhs. Now for this unsecured exposure, I have a 50% unrealizable 50% ECGC cover on unrealizable balance. That's the unsecured exposure. So 50% will be covered by the guarantee. Okay, so I'll reduce the 50%. % of 250, that is 125. Net exposure will be 125 lakhs. Okay, so that is unsecured and without guarantee exposure. Now, unsecured and without guarantee exposure, I received it. Now, if there is this particular asset is a doubtful asset for more than 2 years, doubtful for 2 years. Now, in case of doubtful, unsecured is directly provisioned at 100%. Provision, that is 125. Secured portion. If secured portion, remember we just now discussed, if there is a secured which falls under the category of 1 to 3 years, we require 40%. So secured portion, that is 1,50,000. 40% of this one. That will come to 60 lakhs. So in total, the net provision that I need to have is total of these both. That will be rupees 185 lakhs. Or 1.85 CR. How many of you got the right answer? How many of you got the right answer? See, that's very, very important to understand why I removed ECGC cover. When I talk about standard asset, okay, I specifically, sorry, on standard asset, I specifically wrote without allowance of any guarantee or security. In that case, I need to remove the guarantee or security. But when I talk about loss or doubtful asset, I have not mentioned that words, particular words. In that case, advance which are covered by ECGC guarantee or some guarantees, central government guarantees, those advances are required to be first given the effect for this guarantee. So if there is an advance there, guarantee there, then that first guarantee is required to be adjusted on the unsecured portion, open exposure. See, whosoever will provide the guarantee will provide that, okay, whatever amount is unrealizable, we will give you guarantee on that. Unrealizable value means after security. Okay, so after security, whatever open exposure or unsecured exposure is there, the guarantee will be calculated on that, and then on that basis, your provision will be decided. Clear? Any doubt? Kaushik, can you explain your question a bit more? I can understand with respect to the government guarantee. No, see, again, when I talk about standard asset, again, whatever provision you make on a total amount. In case of standard and substandard, in both cases, whatever provision you are going to make, you are going to make on the total amount. You are not going to make provision in case of standard asset or substandard asset on the basis of, the net exposure. Understand what is the purpose of having higher provisions on doubtful asset and loss asset. See, standard asset are the normal asset which are there. I have no issue with respect to the standard asset in my bank, because most of asset will be my standard asset. If there is no exposure, then there is no point of calculating the guarantees which are given on that particular exposure. So the rates which are given are on the outstanding balances. Okay, are on the outstanding balances. So you need to calculate directly on the outstanding balances in case of standard and substandard. But when I talk about loss asset or doubtful, I need to have a provision in front of my exposure. So the purpose of having provision on doubtful and loss is to cover my exposure, but whereas it's to cover the, in case of standard and substandard, is to cover the contingency. There's a difference between both. I hope you guys are getting. So my provisioning requirement is on the exposure, not on the balance. Understand what is the exposure in case of doubtful and loss asset. Exposure will be, if I explain you with this example, what is an exposure? My exposure here in case of doubtful asset, okay, is this much and is this much. Why I consider security value and exposure? Reason, because when I'll go to sell that particular security, I'm not going to receive the amount immediately. Unless and until it's cash, I'm not going to amount. Let's say it's a property, I need to go for auction. Today, the market value is 150. By the time I do auction, it may reduce. There are chances, depend upon the type of security. Let's say, for example, I have a shares of some company as a security. Today, I know, okay, the value in the market is good. By the time I find, that in case of banks, liquidating the security is not so easy. We have a multiple norms to follow. And by the time I liquidate the security, get the money back through auction or through whatever procedure it is there, value can change. Still, I have an exposure on that particular amount. But when I talk about the guarantee, whatever unsecured exposure will be there, directly 50% I will get. That is not going to fluctuate. 50 means 50. If I have a letter of 50% guarantee, there will be guarantee of 50% only. Tomorrow they cannot say, okay, there has been change, you now take 49% or 48%. That's why I do not make any provision on the guarantee amount. But when I talk about security, yes, it's a secured portion, but still have an exposure. And unsecured, it's fully unsecured, open exposure, so 100%. So Kaushik, your question is, in previous class on NBFC, I said that the government guarantee asset cannot be classified as an NPA. Absolutely correct. If an asset is secured, fully secured by government guarantee, it cannot be classified as an NPA. Reason, because this only. Let's say, for example, there is a 100% guarantee onto your asset. In that lecture also, I specifically clarified what I'm saying is from the point of view of provisioning, not from the point of view of reporting. Okay. So the classification that is required to be done, remember I told you that is required to be done from the point of view of provisioning, not from the point of view of reporting. So in case if there is a provision, when it comes to the provision, I'm not required to calculate that particular asset as an NPA, because when I reduce the 100%, it will not be there anything. So if it is fully covered, there won't be any point to calculate. That asset will be directly out of the picture. So for example, let's say in this case 400 was outstanding balances, and let's say I have a 100% ECGC cover. I'll deduct the security 150, 250 left, and I say 100% cover. I'll again deduct the 250. What is there to make a provision? Nothing. Zero. What is exposure? Nothing. Why should I classify that asset as an NPA for the purpose of the provisioning? But for the purpose of the reporting of NPA, that's a different story. Clear? Any doubt, guys? Any doubt on this particular thing? Very important to understand how to make the provision. Any doubt, guys? Okay. Okay. So if no further doubts, what I'll do is I'll take one more question. Okay, to give you understanding and clarity more. So my loan amount is rupees, let's say 10 crores as on 31st March 2022. This asset was classified as doubtful asset within the category of 1 to 3 years. Okay. So balance 10 CR, doubtful asset within the category of 1 to 3 years. Bank was provided a letter of comfort by the parent company of the borrower a bank was provided a letter of comfort by the parent company of the borrower to the tune of rupees or of, let's say, percentage. I'll for easy I'll get it to percentage, to the tune of 50%, okay, of unrealized amount. The security was only the letter of comfort that was provided. So security was the letter of comfort. There was no other security. Okay. Bank calculated the provision on the said asset at rupees 4 crores. You need to verify whether this is correct or not. So you need to calculate the provision in this case. And you tell me whether the provision calculated by bank is appropriate or not. So you need to understand a simple exposure related thing, and on the basis of that, you need to calculate the provision. Good, Bonnie. Very good. Okay, good, Kaushiki. Come on, guys, pretty easy. Trust me, pretty easy. I have received only 2 answers, but trust me, it's pretty easy. It's on the same line that I'm discussing, that we discussed till now. Okay, so correct, Shailendra. Good, Manini. Okay, so the appropriate answer, and the correct way to calculate the provision is, I have a doubtful asset over here within the category of 1 to 3 years. There's an exposure of 10 CR. In front of that, the security was letter of comfort. Okay, with a 50% amount, unrealized amount. First of all, for me, this is an unsecured, doubtful asset. And why? The reason, because pretty simple. When I talk about security, it is something that is tangible. Unless and until you have a EC, GC security, or there are specified guarantees. Sorry, there are some specified guarantees. But till the time you don't have that guarantees, you have a letter of comfort from XYZ person, you have a guarantee from XYZ person, even from the state government, doesn't matter. It should be from a specified authority, then only the guarantee will work, otherwise will not. So in this case, it's secured doubt. If you have a letter of comfort from a person, like not specified, like in this case, parent company, individuals, even state government guarantees are we are not required to count for the security. So this will not work under the security. No, there is no security or letter of comfort or anything available. So in this case, this is unsecured, requires 100% provision of 10 CR into 10 CR. So my total provision will be 10 crores only. Pretty simple. So usually the term security defined under the prudential norms, security will mean tangible security properly charged to the bank. If it is even not properly charged to the bank, I cannot consider as a security, and will not include intangible securities like guarantees, comfort letters, etc. Exception is there, specified exceptions, but otherwise guarantees, comfort letter, or intangible securities not tenable. Clear? Okay. Okay. If no further doubts, should I proceed? Okay. So this was with respect to the provisioning. Now, what we discussed till now is, first of all, we discussed the asset classification. Then we discussed the provisioning of the asset. Okay, asset classification, asset provisioning. And where were we before this prudential norms? We were on the portion of LFAR. We were discussing all the areas of the LFAR. Okay. So earlier we were talking about credit appraisal, wherein we were required to check this particular item. We were required to check quick mortality in accounts, borrower interest rate is whether it is reviewed periodically or not. On that particular point, we were there, whether that's in something, NPA. We shifted to the prudential norms to understand the NPA. Now, next point is sanctioning and disbursement. Okay, you need to examine whether the credit facilities have been sanctioned beyond the delegated authority or limits fixed by the branch. Yes, no, you need to understand case by case or sample by sample. Okay, whether advances that has been dispersed without complying the terms, conditions of the sanction letter. If so, then you need to go and check by the sanction letter. So what you need to do is check sanction letter and its terms and conditions. Okay, you need to see whether it was fulfilled or not. And then you need to decide whether advances have been dispersed without sanction letters. Did the bank provide loan to companies for buyback of shares and securities, which is not good. So if there is there, then you need to report the same. Okay. In case with respect to the documentation, in case you examine any such instance, then you need to report. And which are those instances? Credit facilities released by branch without execution of all the necessary documents. Okay. Deficiencies in documentation, including non-registration of charges, not obtaining of guarantees, etc. Advance against lien of deposit have been granted without making a lien on the bank deposit receipt and related accounts in accordance with the guidelines of the controlling authorities of the bank. So if there is any issue in the documentation identified, so you need to report. Okay. Then comes the review and monitoring and supervision. So there is a policy or procedure which are laid down by the authorities in the bank, and that is required to be followed. So you need to report whether the procedure laid down by the controlling authorities of the bank for periodic review of advances, including periodic balance confirmation, acknowledgement of debts, followed by the branch, whether it is followed by the branch or not. Provide analysis of the accounts overdue for review or renewal, and what is as per your opinion shortcoming in the monitorings. So you need to review all these things. So this is for the period of review and renewal. So if there is any account which is overdue for between 3 to 6 months and 6 months, then you need to report. Remember, irregularity more than 180 days becomes NPA. Same. That's why over 6 months, which have become NPA. 3 to 6 months, which requires follow-up because the account has been classified as an irregular. Are the stock and book debt statement and other periodic operational data and financial statement etc. received regularly from the borrower and duly scrutinized? Is suitable action taken on the basis of such scrutiny? Is DP appropriately computed? DP means drawing power. Whether the last audited financial statement are obtained for accounts reviewed during the year. So remember, there are certain conditions. If you do not comply, the account becomes irregular. And in this case, if the account becomes irregular for more than 3 months, it will become NPA. Same. So whether these things have done or not, that is something we are required to report. Whether there exists a system of obtaining reports on stock audit periodically. If so, whether the branch has complied with such system. Details of the cases where stock audit was required but not conducted, and where the stock audit was conducted but no action was taken on the adverse features. So you need to verify all these things and you need to report it. Indicate the cases of advances to non-corporate entities with the limit beyond that is set by the bank. Okay. Then, does the branch have on its record a due diligence report in the form of and manner required by the Reserve Bank of India in respect of advances under consortium and multiple banking arrangements? Remember, in our example, we discussed if there is a consortium related, how to classify NPA with respect to the consortium. Let me check if we have covered. Okay, no, that is pending. Let's cover that one also. So I have a very good question on this. So, okay, let's understand this particular requirement first. Does the branch have on its record a due diligence report in the form and manner required by the RBI in respect of advances under consortium and multiple banking arrangement? Give the list of accounts where such certificate report is not obtained or not available on record. In case the branch is not a lead bank, a copy of certificate or report that should be obtained from the lead bank for review of the record. Now see what happened in this particular multiple banking arrangement or advances under consortium. There are multiple banks which comes together. Okay, let's say for example, there is a person, or let's say there's a company XYZ Limited who requires a loan. So it is approach to, let's say, ABC Bank. Okay, it will say that ABC Bank give me loan of 1000 CR. Now ABC Bank will see the amount and will say, okay, this is a very big exposure. 1000 CR loan, very big exposure. I think it's risky if I provide if I provide loan alone to that particular person. Okay. So what ABC Bank will do is it will approach various banks. Let's say BCD, DEF, then MNO. Okay, it will reach out to various banks. And it will ask them to share the exposure. So each bank will share the exposure. Let's say, for example, total loan is 100 CR. This bank will agree, okay, I'll give 100. Total loan required 1000. I'll give 100 CR. This will say I'll give 200 CR. This will say I'll give 300 CR. Or let's say 100 CR. 200 CR. Total, they shared 500 CR. Rest 500 will be given by ABC. So in this case, the bank which is which is leading the particular arrangement, or which is coordinating with all the banks, is known as the leading bank. In the consortium arrangement. Now, with respect to the payments, when the payment time will come, let's say EMI, installment due, whatever, XYZ will pay to ABC Limited, ABC Bank. Payments will be done by XYZ to ABC, not to each and every individual bank. Okay, so XYZ will pay to ABC, then ABC will pay to respective banks. Then ABC Bank will pay to respective BCD, DEF, MNO. That's the arrangement that they do. Okay. Now, this is the consortium arrangement that is there. Let's take one question to understand this particular example in detail with respect to classification of asset. PBC Limited obtained a long-term borrowing facility of 45 crores from various banks under the consortium lending arrangement. ABC Bank loaned 3 crores to the PBC under the arrangement. The prime lender was WAN Bank with a lending of 25 crores. Under the arrangement, all the payments were made to the WAN Bank by PBC Limited. Then it was the duty of WAN Bank to part the amount with the other banks in the consortium. On 1st June 2020, WAN Bank came to know about the deteriorating financial position of PBC Limited. Hence, the WAN Bank, instead of parting the remittance, applied all the amount received first to their outstanding. Till 31st March 2021, no amount was parted by WAN Bank to other banks. ABC Bank classified the said account standard as the amount was received by the WAN Bank, but it was not shared with the other banks. So you need to report, you are with from the side of ABC Bank. Remember, we are from the ABC Bank side. So you need to report whether this account will be classified as an NPA, because since June, we have not received any amount. So sorry. Yeah, over here. Since June, we have not received any amount, but all the amount which were received by the WAN Bank. ABC Bank has not received any amount. Still, ABC Bank classified as in standard asset. What do you think? The classification is correct or not? I'll come to there's a question with respect to the interest rate charge on such kind of loans. I'll come to that, Manini, on that particular point. What do you think? The classification here by the bank is correct or not? Very important to understand. Correct, Shailendra? Correct, Manini? See, amount is being received by the WAN Bank, okay, WAN Bank, but WA Bank is not sharing that amount with other banks. So WA Bank is receiving the amount continuously. Okay, so there is no issue because as of now, like as per the question, ABC Bank says that okay, the amount is being continuously received by WN Bank, but WA Bank is not sharing with us. So company is paying the amount to the bank. It was duty of WA Bank to share with the other banks, but the WA Bank was not sharing the amount. Now you need to tell, in this case, can I record this particular asset as a standard or I should record it as an NPA? Come on, guys, pretty easy. Okay, good. So, I received the answers. Correct, Manini. Correct, Kaushiki. In this case, what will be the scenario is, as per the prudential norms itself, if, okay, where the bank receiving the remittances, like in our case, it's a WAN bank, where the bank receiving the remittances is not parting with the share of other member bank. Okay, in that case, account will be treated as a non-serviced in the books of other member banks, and therefore should be treated as an NPA in the books of other member banks. So here we need to see from the point of view of other member banks. If WAN bank is not parting amount, then ABC bank should recognize the account as NPA, because ABC bank is not able to receive the amount, and if they are not able to receive the amount, that means there are chances of exposure. That's why my asset category will change. Clear? Okay. Then next point is, has the inspection or physical verification of the securities charged to the bank being carried out by branch as per the procedure laid down by the controlling authority? Whatever securities are there, you need to consider, have physical verification. Then there is whether there is a substantial deterioration in the value of the security during the financial year as per the latest valuation report in the comparison with the earlier valuation report. Now, very good point. Very good. Okay. Because what happens is, when there is a erosion in the value of security, in such cases, we need to consider, some specific conditions. I'll tell you. I'll explain again with an example. So Miss G obtained a loan of 2 crore against a property valued of 2.5 crore at the time of value assessment by bank. During the year, due to the compulsory acquisition of the nearby land for the purpose of sewage treatment plant, the property valuation fell to 95 lakh rupees. There was a potential threat for the recovery also identified by the bank for this particular loan. Hence, the bank classified the same as a substandard asset on 31st March 2021. You tell me, what do you think? The classification is correct? As of now, there is no issue with respect to the payment. So I'll tell you, no dues are outstanding or overdue. So dues are not outstanding or overdue. What do you think? Whether this substandard classification or NPA, basically, if I talk about substandard, I'm talking about NPA over here. Okay, I can write NPA also. So bank classified NPA the same. What do you think? Is this the correct classification? Is this a correct classification? Okay, correct, Banini. So, Kaushiki, Aniket, what should be the classification then? Shailendra, what should be the classification then? Either it should be a performing asset that is a standard, or it should be NPA, various categories of NPA. What should I classify this as? Okay. Okay. Good. Let me explain you the provision over here. So, what prudential norm says there? It's simple. In case of an erosion of the value of the security, okay, if the erosion is more than 50% of the value of the security assessed by the bank at the last inspection, or at the time of acceptance by the bank, in that case, if there is an issue with respect to the recoverability identified, you need to classify that account as an NPA. But that NPA should directly be classified as your doubtful category without passing through the substandard. Okay. Now here, in this case, if there is uh, potential threat of recovery, I need to classify the account as an NPA. But there are various stages of NPA. Now, those stages I'm not required to follow if value of security has reduced by more than 50% compared to last assessed value. If this is the case, okay, this NPA, if this is the case, then this particular NPA will become my doubtful asset. Will become my doubtful asset directly. Okay. I'm not required to go for substandard. However, if or I'll have a condition of or if value of security is less than 10% of outstanding borrowing or any of the account or facility that has been obtained. So if less than 10% of outstanding borrowing, okay, then in that case, this particular account should directly be classified as an loss asset, and this security should be ignored. Why? Reason because when I talk about a security, security means that should cover certain amount. If that security is not able to cover 10% of the amount of your borrowing, also means you don't have any security. Okay. So if you have a 10% coverage, means you don't have any security. So that's something you think that you have a security, but actually you don't have anything. 10% is not, less than 10% is not an amount we should consider even. So in that case, that will become directly loss asset without any security. So this is the classification, and hence, if there is a potential threat, you should classify NPA. If the value of security has gone down, you should make it to the doubtful asset directly. Clear? That's why we are required to report in LFAR whether there has been is a substantial deterioration in the value of security during the financial year as per the latest valuation in comparison with the earlier valuation report. If yes, then you need to consider the same for the provisioning purpose also. Okay. Then, in respect of advances examined by you, have you came across cases of deficiencies, including value of security and inspection thereof, any other adverse features such as frequent unauthorization, overdrawing beyond limits, etc., inadequate insurance coverage? So you need to report for that. Whether the branch has any red flags. If yes, whether the deviation were observed related to the compliance with the bank policy. Then you need to comment on the adverse features considered, in significant top 5 standard large advances which need many management's attention. In respect of leasing financial activities, has the branch complied with the guidelines issued by the controlling authority of the bank relating to security creation, asset inspection, insurance, etc.? Has the branch complied with the accounting norms prescribed by the controlling authorities for the leasing of such activities? See, now comes to the asset classification, provisioning, and stress resolution of stress asset. Has the branch identified and classified advances into standard, substandard, doubtful, loss through the computer system without manual intervention? Through computer system. That should be through computer system. Is this identification, classification in line with the norms prescribed by the RBI, that is prudential norms that we discussed right now? Whether the branch is following the system of classifying accounts into SMA 0, 1, and 2, whether the auditor disagrees with the branch on the classification of advances into standard, including SMA 0, 1, 2, substandard, doubtful, loss, the details of such advances with reason should be given. So, in order to disagree or to challenge whether their assessment is correct or not, you need to understand what are the prudential norms first that we discuss right now. Then only you can say, okay, the classification done by management is incorrect, and I'll do this is the correct classification. Also indicate whether the required changes have been incorporated and suggested in the memorandum of changes. List the account with outstanding in excess of 10 crores, which have either downgraded or being upgraded with their rating classification to as non-performing or asset or standard asset during the year. So big accounts, if you change their rating from standard to non-performing or non-performing to standard. Whether the RBI guidelines on income recognition and provisioning have been followed. Whether the branch has reported accounts restructured or rephrased during the year to the controlling authority by bank. whether the RBI guidelines for restructuring on all such cases have been followed, whether the branch complies with the regulatory stance for the resolution of stress asset, including compliance with the board approval policies regarding tracking, reporting, and other, whether the upgradation in non-performing advances is in line with the norms of RBI. So what are these upgradation norms? Okay, I'll take you one example and I'll discuss in detail. Very important one. Mr. X obtained a loan of rupees 10 crores in FY, let's say 15-16. Since FY 19-20, Mr. X was not able to pay the installment or interest overdue on the account. On 31st March 2022, Mr. X paid rupees 2 CR, okay, paid rupees 2 CR from the outstanding amount. So, from the outstanding and overdue amount of rupees, let's say 5 crore. So there was 5 crore were outstanding and due. From that, he paid only 2 crores. Okay. Also, Mr. X submitted a letter of assurance that he will clear the said account, said outstanding of rupees 3 CR in next 3 months, and then he will continuously, then he will not continuously, and then he will regularly, basically, then he will regularly pay the installments as and when they become due. Bank classified the said account as standard on 31st March 2022 as Mr. X paid some amount with letter of assurance. Okay, so the bank is saying that, okay, now Mr. X has paid the amount of 2 CR and he will pay 3 CR in the next 3 months. then it is fine, and they should classify this particular account as a standard. So you tell me whether this classification is correct or not. Okay, so Mr. X was, like, he was supposed to pay 5 CR. That was overdue. He paid 2 CR from that. He provided a letter of assurance that in next 3 months he will pay the rest of the 3 CRs, and then he will regularly pay all the amounts. On 31st March, he pays 2 CR. Okay, now bank is classified as standard because he has already paid the amount, partial amount, and partial he will pay in next 3 months. So you tell me whether that is correct or not. Okay, so see here, to upgrade the status of account, the conditions are pretty simple. The conditions are pretty simple. Conditions are, account can be only upgraded when the entire arrears of interest and principal are paid by borrower. So first you pay entire interest and principal which is in arrears by borrower. Okay, then once you do that, okay, then your account will be continuously monitored, and on the basis of that you need to classify that account as a standard asset. Okay, so basically accounts which are regularized about near balance sheet date with a few credits should be looked into with very care, because that is something not appropriate as per the prudential norms, and they should be deemed as to be as a NPA. Okay, so along with this, there should be another condition, is that there should be satisfactory performance or genuine reason, or you can say not genuine reason, but there should be satisfactory evidence, I should say, evidence available. Satisfactory evidence should be available that the person will continue to perform or pay that amount. Then only you should classify that account as an standard from NPA. If these conditions are not met, you cannot classify the account into the standard category. So in the current case, rupees 3 CR, 3 crores is still overdue out of rupees 5 crore. Hence, even my first condition is not satisfied. I cannot classify as standard. Simple. It will be non-performing asset only. And if it is due for more than like 12 months, if it is substandard for more than 12 months, or sorry, if it is NPA for more than 12 months, then it will become doubtful with the various categories. Clear? Okay. So there is a question that what are stressed assets? Stressed assets are assets other than standard, other stressed one. It can be SMA 012. It can be your substandard, standard, substandard, doubtful, loss asset. These all are stressed assets. So generally, for the stress asset, what is the scenario is, once any default has been reported by, means any lender performs any default, okay, or there are any such conditions that he will default, then a resolution plan is required to be implemented during the review period, okay, and like a review is done, then it is seen how it is performing and everything. So there is the guidelines for implementation of a resolution plan for the stress assets, but again that is a different story and different topic to discuss. Yeah, so that's the stress asset. See, there is a question that what should be the monitoring period for the satisfactory performance. See, that depends upon the review period that is decided. So review period can be different for each of the resolution plan. Okay, it may depend, that depends upon the amount, that depends upon the performance and the securities and everything. So there is no standard review period available. It can be 180 days, it can be 365 days. There are different provisions, different requirement for that. Red flag it. Okay, so there's a question, what are red flagged accounts? Red flagged accounts means you don't have appropriate documentation, you don't have a security where you should have a security, the value of security has decreased, the person has overused his facilities more than the sanction limits, the person is what do you say, not consistent with respect to the payments, there is some other account of the same person which has been where there has been default, something like that. Any doubts? Any doubts? Okay. If no further doubts, what I can suggest is let's take a quick 10-minute break and then we'll gather back after the break. Okay. We'll continue. Hello, everyone. Welcome back. So, uh, there are some questions. I'll take it up first. Okay. So, can a NPA account be categorized as a red flag account? See, depends upon red flag means what? That before the account turns an NPA, there are some indications. Those are red flags. And if an account is an NPA, means there was a red flag and that has been turned into an NPA and that is classified. So it's a post red flag situation, sort of. Then there's a question: does RBI prescribe IFAR? Can you repeat what is IFAR, Kaushiki? That will be helpful for me. Okay. Okay. So yeah. So guys, that was with respect to NPA that we're discussing. Let's go back to the LFAR. Okay. We'll see that next point is: have you came across cases where the relevant controlling authority of the bank has authorized legal action for recovery of advances or recalling of advances, but no such action was taken by the branch? If so, details of such cases. Then, where there are any accounts wherein process under IBC is mandated but not initiated by a branch. IBC means insolvency. So if any account is there where there is what you say that is being stressed, there is a resolution, restructuring is required, or insolvency proceedings are required, something like that. So if that has been warranted but that has been not initiated by branch, where there are any borrowers at the branch against whom the process of IBC is initiated by any of the creditor, including bank. If yes, then provide the list of such accounts and comment there too. So you need to comment on such accounts, and that can be done only by way of identification of such accounts. By performing detailed analysis of the accounts, you need to go to the underlying document whether the payment is regular or not. If there is any intimation of there is such claim, so you need to go through those particular documentation. Then have appropriate claims for credit guarantee, ECGC and others, if any, duly lodged and settled. So what was the claim at the beginning of the year? You need to provide how much of the claim further lodged during the year, how much the amount of the claim you have received or settled, then amount which is rejected. So you need to provide the details for such account number and amount. Okay, what was the claim given? Claim rejected, accepted, all those details. Give the details of claim rejected, whether the rejection is appropriately considered by determining the provision requirements. So once a claim gets rejected, that guarantee is no longer a good guarantee, or we cannot count as that as a guarantee. In that case, whatever amount of guarantee was we were deducting earlier, we need to now consider that as a part of the unsecured one. In respect of non-performing asset, has the branch obtained valuation report from the approved valuers for the immovable charge to the bank? Once 3 years, unless the circumstance warrant a shorter duration. Remember, I talked about the security, it should be tangible asset. And when I talk about the security, we need to check the valuation of the security once in a 3 years. Reason because what if that value deteriorates over the time and we never come to know if we don't get a revised valuation. So that's why the revised valuation once in a 3 year is mandatory for the immovable property. Okay. And what is the position of that security that is necessary to be examined? In cases examined by you, has the branch complied with the recovery policy prescribed by the controlling authorities of the bank with respect to the compromise, settlement, write-offs cases? If yes, then provide the details of the cases of compromise, settlement, and write-off, cases involving write-off and waivers in excess of 50 lakhs. So there are certain policies where waivers are provided. There are certain cases where the bank may think, okay, you can get the waiver, but any such waiver in excess of 50,000, settlement in excess of 50 lakhs, sorry, is required to be reported. Reason because that amount is a big amount. Settlement of that much amount by a branch is always, something that is required to be disclosed to the controlling authorities or head office, and that is necessary. Is the branch prompt in ensuring execution of decrees obtained for recovery? Give age-wise analysis of the decrees obtained and pending execution. So usually we get a decree from the court based on the the litigation for the recovery of the amount. If such has been obtained, then how much of are pending for execution? Whether in case concluded the recoveries have been properly appropriated against the principal and interest as per the policy of the bank. In case where the documents are held at the centralized processing centers, offices, whether the auditor has received the relevant documents asked by them, check basis and satisfied themselves, report the exception. Okay, so you need to provide those particular details, whether you have received the documents or not. List down the major deficiencies in credit reviewing, monitoring, and supervision. So if you identified any such deficiencies, then you need to report such deficiencies in credit review, credit monitoring, and credit supervision. Insolvency, IBC means Insolvency and Bankruptcy Code. Okay, so there is one question. Does RBI prescribe LFAR? Yes, this is prescribed under the RBI regulations. If I show you on the top, this is a notification issued by Reserve Bank of India. This is the reference number for the notification that we are referring to. Okay, long form audit report. So based on the notification and the regulation prescribed by the RBI, this particular statement we are reviewing, like that's something we need to review, or we need to provide to the bank. Okay. Manini, with respect to your portion on the money laundering activities and areas that auditors should check and see, I'll come back when we'll reach on that particular point. I'll take it when we will be there. Okay. Any other question, guys? Okay. Non-fund based facilities related reporting. So list of borrowers with details of LC, default or guarantees invoked during the year. List of borrowers where LC have been default or guarantees have not been invoked but not paid with the amount thereof. Then instances of interchangeability between fund-based and non-fund-based facilities was allowed subsequently to the development of the LC. So you need to provide that. Okay, then other assets, what we are required to report for the other assets. First, sundry assets. So does the system of bank ensure expeditious clearing of the items debited to suspense account? Details of outstanding entries in the excess of 90 days may be obtained from the branch, and reason for the delay in adjusting the entries may be ascertained. So you need to provide, is there any entry which is debited to the suspense account and it's in excess of 90 days aging? Does your scrutiny of the account under various subhead reveals balances which in your opinion are not recoverable and would require a provision or write-off? So you need to provide whether there's any write-off required. Okay, so there is one question with respect to LCs. letter of credit. When I talk about LC, it's a letter of credit I'm talking about. And BG means bank guarantee. IBC was when I was talking about its insolvency and bankruptcy code. Okay. Then does your test check indicate any unusual item in these accounts? If so, report their nature and the amount involved and their intangible. Are there any intangible items under this head? Under this head means sundry asset. Example, losses not provided or pending litigations, something like that, then you need to report. Now we'll start with the liability side. Okay, what is required to be reported? So does the bank have a system of identification of dormant or inoperative accounts and internal controls with regard to the operations in such accounts? In case you examined by you, have you came across any instance where the guidelines laid down in this regard has not been followed? After the balance sheet date till the date of audit, whether any unusual large movements in the aggregate deposit held at the end of year? If so, obtain the clarification from the branch and give your comments. So it is talking about events occurring after balance sheet date. So is there any major event occurring after balance sheet date? If yes, then details thereof. Whether the scheme of automatic renewal of deposit applies to FCNR deposit where such deposits have been renewed. Report whether the branch has satisfied itself to as a non-resident status of the depositor and whether the renewal is made as per the applicable regulatory guidelines. What is FCNR is? Foreign currency foreign currency deposits. Okay. Now foreign currency non-resident deposit, it's basically for non-residents. Now if it is a person is a non-resident, then only he can obtain for FCNR. So we need to check, is there any automatic renewal of such deposit without being, checking the status of the person as a resident or non-resident? Is the branch complying with the regulations on minimum balance requirement and levy of charges on non-maintenance of minimum balance in individual saving account? Then comes to the other liabilities. The number of item and aggregate amount of the old outstanding items pending for more for 1 year or more obtained from branch and report under this particular head. Does your test check indicate any unusual item or material withdrawals or debit in the account? You need to then provide that detail. Contingent liabilities, very important. Now list major items of the contingent liabilities other than the constituent liabilities such as guarantee letter, credit, acceptance, endorsement, not acknowledged by the bank. Now, if you see with respect to the contingent liabilities, okay, there is a specific schedule also in our annual report or audit report that we for the contingent liabilities. And let me show you. So there's a schedule 12 which talks about contingent liability. Okay. If you see in contingent liability, bank already discloses claim against bank not acknowledged as a debt, taxation related, other related, liability for partly paid up investment, liability on account of outstanding forward exchange contracts, liability on account of outstanding derivative contracts, guarantees given on behalf of constituents in India, outside India, acceptance and endorsement and other obligations, items which for which the bank is contingently liable. So these are the contingent liability disclosure that bank gives. Other than that, there are other disclosures also for the contingent liability. That is something with relation to what I can say is specific provisions are there. Like for example, if there is a contingent liability in case of forward exchange contract, so there is a disclosure in that. What is the provision for the contingent liabilities for other contingencies? So provision related to the contingent liabilities is there. Then the descriptions of the contingent liability is required to be given. Let me show you one example. Okay, here it is. See, this is provision and contingent liability related disclosure in the bank. Okay, so we provide provision for credit card and debit card reward points, whatever it is there. Provision for legal and other contingencies. Then description of contingent liabilities. So various descriptions are given for the contingent liabilities. Let's say, for example, this other item for which the bank is contingently liable. It may include credit enhancement in respect of securitized out loans, bills rediscounted, capital commitment, underwriting commitment, investment purchase, amount transferred to RBI under deposit educational and awareness fund. So every contingent liability is explained over here. There is another, breakup of contingencies given whatever is charged in my P&L account. So I need to provide for that also. So if you see, I'll show you what is charged in my P&L. So additional details is also given. This is the detail of provision and contingencies included in the profit and loss account. It may include my provision for income tax, provision for NPAs, provision for diminution in the value of non-performing assets, provision for standard assets, other provision and contingencies, something like that. So there are various disclosures which are already given in the bank balance sheet. Okay. So this is one of the disclosures that is there. Some of these disclosures that is there for the contingent liabilities. Same way in the LFAR, we are required to report list major items of the contingent liabilities not acknowledged by the branch. So if there is any such item which is not acknowledged, then we need to report, which says that other than the constituent liabilities such as guarantees, letter of credit and all such. Then P&L related disclosures or reporting, whether the test checking of interest, discount, commission fees, etc. revealed excess or short credit of material amount, means you are not credited the appropriate amount. Whether the branch had complied with the income recognition norm prescribed by the RBI. So whether the branch has complied with the income recognition norms. Okay. Now, what are these income recognition norms? I think I discussed in my previous lecture also income recognition norms. Details on the how incomes are recognized in case of NPA accounts. But again, I'll take one more example. Okay. Let's take one more example. Remember in last lecture, we carried one example. Mr. J obtained a loan facility in 15. During 2020, Mr. J obtained the benefit of moratorium, but no payment was made by Mr. J for the outstanding. And we decided whether this will be, how we need to classify this an NPA or not. Now, we understood that was classified as an NPA in the last lecture. Now, the second part for this is on 31st March, bank reversed the whole of the interest capitalized as the account was classified as the NPA. Okay. Now, what we are discussing here is income recognition for the NPA. So it's on the same line. If I talk about income recognition for the NPA, it's on the same line that we saw in the NBFC. You tell me whether the interest in this case, which was capitalized, was reversed by the bank is correct or not. That point I have already discussed in the NBFC also. The same is applicable here also. So you tell me whether this reversal of interest is correct or not. So Mr. J obtained a facility in 2015 from the bank. During 2020, Mr. J obtained the benefit of the moratorium period, and the bank capitalized the interest of 3 months, 1,65,000, which was accrued during that period. Post that, since August 2020 till March 2021, no payment was made by Mr. J for the outstanding amount. That makes my account as an NPA. On 31st March 2021, bank reversed the whole of the interest capitalized, that is 1,65,000, as the account was classified as an NPA. Is the bank correct in our case? Same, I discussed this point in NBFC also, and same it is applicable over here also. Good, Kaushiki. Okay, so I'll come to the income recognition. Okay, now the basic provision for the income recognition is that we are not required to take income on accounts which have become NPA. So policy of income recognition is that bank should not charge or take income on the accounts or interest on any NPA. So if account is NPA, first of all, do not recognize any income. First thing that is there. Second, if any advance becomes or account becomes NPA, the entire interest accrued or credited to that account, interest credited and accrued to that account. Okay. To the extent not realized is required to be reversed. So interest or income that has been interest accrued or credited to that particular account, to the extent not realized, okay, if the account is an NPA in past period, okay, This will be in past period, that has been credited in past period, that is required to be reversed if that is not realized. Same in respect of fees, commission, and other similar incomes. If it is respect to the past period, uncollected on an NPA account, reverse it. Okay. This is even with, applies with, government guaranteed accounts. Applicable to government guarantees account also. Okay. So if it is a government guaranteed account where the government guarantee is there, still I will not recognize any income till the time I collect it. Clear? So this is the basic case for the income recognition. That this is the way I'm required to recognize the income. Now, in case of moratorium, if any interest has been capitalized during moratorium period, if any interest capitalized during moratorium period, okay, then such interest is not required to be reversed, but is not required to be reversed provided that account before moratorium was my performing asset. It should not be a NPA before moratorium. Okay, so that should be provided account before moratorium period should be standard asset or not an NPA, not an NPA. Clear? So if that is the case, then no need to reverse. In our example, account was good, but after moratorium it became NPA. So interest capitalized is not required to be reversed. Clear? Okay, let me take another example. Mr. X obtained a OD facility from ABC Bank, okay, in FY 1920. In FY 21-22, the following were the credit in OD account, the outstanding balance. OD facility was of rupees, let's say 10 crore. Okay, outstanding balance outstanding, and interest charged by bank. Okay, so this is the detail for that. Period credit in account, outstanding balance, debit of interest. One 4/2021 to 36/2021. Then the next period is 1/7/2021 to 39/2021. Then 1/10/2021 to 31/12/2021, and then 1/1/2022 to 31/3/2022. Okay. Okay, I'll provide this detail. So credit in account. Credit in account means payment by that particular person. Okay, so the payment by that particular person in the account was, let's say, I'll first write the outstanding amounts, outstanding balance at the end of each quarter, you can say. Quarter ending. 11 crore, 12 crore, 11.5 crore, 12.5 crore. Okay. Then credits in account. Credit was, let's say, 3 crore, 3.5 crore, 2.5 crore, 2 crores. That was the credit by the person. Okay. Debit of interest in that particular account. So we will see what is the debit. So just a minute. Let's say, for example, debit of interest is, or you can say, in case of particular this account, okay, so the debit of interest for that particular account, let's assume 3.5 crore, 4.5 crore, then 3 crores and 2.5 crores. Okay, so that is particularly my debit of interest to that particular account. Okay, now what happens is, in this current case, bank has classified the said account as standard on 31st March 2022 and has recognized interest income to the tune of rupees, you can say 3 CR during the year. Okay. So bank has recognized the interest income of 3 CR during the year, and bank has classified the said account as an performing asset, or means standard asset. So you tell me whether this particular classification is correct or not, and the income charge is correct or not. So here debit of interest, instead of debit on interest, what I'll do is total debits. This is total debits. This is the particular question. Okay. You tell me whether the interest recognized and the classification is correct or not. Just one correction. Instead of 2.5, I have a 3. Just to balance the amount. That's it. Everything. Yeah. So you tell me whether this is appropriate or not. Also, I'll provide one more information, additional information. Out of 3 crores, interest debited to the account, bank was able to realize only rupees 50 lakhs till 31st March 2022. So this is the particular question. Okay, first tell me what should be the category of the asset and what should be accordingly the income recognition norms for this particular asset. And if you say any category, also provide the reason why that particular category you are recommending over here. So we have discussed this particular question before also. Let's say on the same line. Come on, guys. So total loan facility or the OD facility was of 10 CR. Okay. These are the total debits. These are the outstanding balances, and these are the credits in the account. You need to tell whether this particular classification is correct or not. If yes, then what it should be the income recognition norm? Okay, Manini. Okay, good. Okay, Kaushiki. Okay, Shailendra. Come on, guys. I'm waiting for further answers. Okay, let me tell you. This is a non-performing asset. Okay, this is a non-performing asset. Clear cut. Why? Reason because I'll take as of now one condition. Outstanding balances is more than the amount sanctioned. Okay. Remember, out of order norm that we discussed, if the drawing power is calculated based on the stock which is older than 3 months, or there was, uh, so here we remember discuss if the drawing power is not appropriately calculated, or the debits are even the credits are not able to cover the interest debits. Okay, so we discussed this particular in detail in prudential norms with respect to one of our example, like for example over here. Remember something we discussed in this: interest debited during the period, amount credited in our previous example. Even we discussed an example where it was out of order account number 2, which was because the balance, closing outstanding balance, was more than the sanction amount. Remember, we discussed in previous example, it's nothing but the combination that we are seeing over here. It's the same combination that we are discussing. Okay. Now, if this is the combination of both, nothing else, it's a combination of both, but on the basis of that, I say that's an NPA. This will become NPA once it crosses or it becomes an out of order. Okay, so it was out of order if the account remains continuously in excess of the sanction or drawing limits. It will become out of order. Remember, in the prudential norms we discussed for the asset classification, out of order, if balance over here, balance outstanding is more than 90 days of the sanction limit, this will become NPA. So here, same, more than 90 days, balance is outstanding more than sanction limit. Okay, if this is the case, then here it was the NPA at the end, this was NPA on 30th/6/2021, assuming the excess started from here, assuming the excess started from 1/4/2021, NPA, it will become NPA on 30/6/2021, and by the time of 31st March, it is NPA less than 12 months, that will make it is substandard. So not doubtful, it will be a substandard asset. If this is a substandard asset, then NPA and substandard, then income to the tune which is only recognized shall only be, the income which is realized shall only be recognized. So income realizes rupees 50 lakhs. ₹50 lakh is realized. This will only be income recognized. Not whole of 3 CR. Okay. Now, let me change one simple item and then you let me know whether it will be same or not. So in this example, what I'm going to change is, instead of this 10 CR, let's say the sanction limit is 15 crore. Now tell me whether this will remain same or this will change. This will remain same or this will change. Good. Good, Kaushiki. Good, Manini. Okay. And why it will change? See, again, my credits in the account are lesser than the total debits. Remember, my credits in the accounts are still lesser than the total debits. My credits are still less than the total debits in the account for a period of continuously whole year. What do you think? Still it will be counted as an NPA or not? Absolutely correct, Kaushiki. So I'll explain. The prudential norm says that credit in last 90 days are not sufficient to cover the interest debited. It talks about the interest debited, not the total debits. In our example, it's the total debit. My interest debited was only 3 CR, and even my single credit is sufficient and able to cover that. So it is not overdrawn. There is no issue if I have a credit lesser than the total debits. As long as I cover my interest, this account will not be classified as an NPA if this limit is 15 CR. If this will not be classified as an NPA, this will be standard asset, and I can recognize 3 CR interest income. So there will be no issue on the interest income recognition. Clear? So if this was 15 CR, same example with 15 crore, then no NPA. This would have be applicable and full income should have be recognized. Clear? Any doubt, guys? Okay. Let me go quickly on the LFAR. So then it comes talks about test checks on the interest on deposit, revealed any excess or short debit. Then they talks about does bank have a system of estimating and providing interest accrued on overdue, matured, unpaid, unclaimed term deposit? Is there any divergent trends in major items of income and expenditure in comparison with corresponding previous year which are not satisfactorily? You need to explain that. Okay, that is there. General related, like the gold. If there is a gold is in, ensure the system of gold is in effective joint custody of 2 or more official. Branch maintain adequate records and receipt issues balances of gold and bullion. Then bank ensures that the appropriate internal control is there over the gold. Then it comes to the books and record, where there are software systems used at the branch which are not integrated with the CBS. Core banking system means a CBS. So if any system not integrated with CBS, then give the details thereof. In case of branch subject to IS audit, information system audit, any adverse features reported and have an indirect or direct bearing on the branch, give detail of that. Whether branch is generating and verifying exception report at the periodicity as prescribed by the bank, whether the system of bank warrants expeditious compliance of the daily exception reports. Okay, any major observation pending such compliance at the end of year. Then whether the bank has laid down procedure for manual intervention to system generated data and proper authentication of the related transactions. Furnish your comment on the data integrity, including data entry, checking correctness, and everything, which is used as MSI at HO and CO level. Inter-branch accounts related, fraud related reporting. So there is a fraud related reporting is also there in LFAR. I'll not go much in detail because it's on the same line as there. Implementation of KYC and AML guidelines. So AML is the anti-money laundering, KYC, know your customer guidelines. That is there. Management information system, whether branch has proper systems and procedures to ensure all MSI reports, all data inputs are appropriate. There are some miscellaneous items which are required to be reported, like comment arising out of previous year branch audit report, internal audit, SNAP audit, concurrent audit, credit audit, stock audit, RBI inspection, any such audit. So is there any comment coming from that particular report? As there are like any other matter that we want to bring to the attention of the management of central statutory auditors. So that is something, about the LFAR. These are the things that we report. Any doubt with respect to LFAR? Prudential norms, provisioning of asset, classification of asset, income recognition. So there is one question, what is exception report? So exception reports are something, the system provides them. It can be an exception to the policy, because in what happened in CBS or core banking system, all the bank policies are integrated into the ERP or the CBS basically. Now, if you try to pass any entry or any transition which is against the policy, not as per the policy, that will throw you an exception. That is the exception report that they are talking about. Any doubt, guys? Let's cover one more question so that we could have a better understanding. So in previous lecture, we covered one point number 2 from this particular one. Let's cover the rest of the things also. So Gupta and Company has been appointed statutory auditor of TCB Bank, a private sector bank registered with RBI. Mr. Keval Gupta, the engagement partner, while performing the audit as per the checklist, noted the following points, which would be part of the audit queries as tabulated below. Interest on state government guarantee advances has been taken into even though such advance has remained overdue for the period of more than 90 days. One by one, comment on this particular one. Interest on state government guarantee advance taken to the income, even though such advance remained overdue for more than 90 days. So let's comment one by one on each item. What should be the case over here? Correct. It's an NPA, more than 90 days. And on NPA, income which is realized should only be recognized. Here, income has not been realized. Okay. Then we are required to reverse that particular income. Second, we covered in the last lecture. Third, one such NPA, one of the NPA was sold for a, just a minute, yeah. One of the NPA was sold for a value higher than the net book value. Profit was not recognized, but the excess provision in respect of the same has been reversed. I have not covered this point. Now the thing is, I'll explain you. NPA can be sold to other banks. Okay. Now, if NPA can be sold to the other banks, either you can sell it at the higher of net book value. What is net book value? NPA minus what do you say? Provision, or lower than the net book value. Okay. If you sell lower than the net book value, there will be loss. Means your provision was short. This loss is recognized to be in P&L. But if you sell higher of the net book value, what is the scene is there is an excess provision. Now this excess provision is not required to be taken to P&L, as this should be adjusted against the sale or the loss on the sale of other NPAs. So this excess should be adjusted. See, the entry for the reversal of the excess provision would be cancelled in the books of account, and such excess provision would be retained to meet the shortfall or losses that may arise on the sale of other non-performing financial assets. So this particular excess should be retained. Clear? So that is something was still not covered, but okay. Number 4, in one of the in case of one of the accounts, the additional temporary limit has been sanctioned for the 25% of the existing limit for 120 days tenure. Again, now when I talk about ad hoc limits or additional sanction limit, that should not be, more than 20%, but should not be maximum tenure of 90 days. So that limit can only be sanctioned to the tune of 20% for 90 days. Here it is 25% and 120 days. Both are not allowed. And the last one, on verification of outstanding forward exchange contracts, the net position in respect of one of the foreign currency was not squared and was uncovered by the substantial amount. Okay. Now again, the net position in relation to that particular foreign exchange contract should be square of that particular branch and should be get covered by should be squared off. And it should be covered by a substantial amount. It should not be the case that is not covered by a substantial amount. So that is also not correct. So what should be the case is net position for any of the foreign currency exchange contracts, derivative contracts, okay, should be squared off at least at the branch level. The position should be squared off at least at the branch level. Of position of the branch, net position of the branch in relation to the each foreign currencies should be squared off and get covered by a substantial amount. Okay, so these were the 5 items that I wanted to discuss. Any doubt with respect to any of the item? Any doubt, guys? Okay, last one. Now, what happens is in forward exchange contracts, okay, every branch is required to net off or square of their forward exchange contracts. So, for the forward exchange contracts, or basically they are the derivative contracts. Okay, so these derivative contracts are required to be squared off at the branch level, and they should be covered by substantial amount. It should not be the case they are not covered. In the current case, it is both. It is not squared and it is uncovered. That is not allowed. Any doubt? So in 3, profit will not be taken to the P&L. Profit is not required to be taken to the P&L. Excess means excess provision. Whatever the excess is there, it is not required to be taken to the P&L. It will be retained and it will be adjusted if there is any loss in front of any NPA, sale of any NPA. Okay, guys, in the next lecture, what we will be doing is we will be covering the peer review. Okay, just an update on that particular portion is now there are peer review guidelines. Earlier it was a peer review statement. Now there are peer review guidelines which are applicable for your May 23 exam. Okay, Now these peer review guidelines are applicable and we will be discussing in next lecture, okay, on the peer review. And please try to read before the lecture if possible. That will be very helpful for you guys to understand those particular guidelines. And yes, so we will be I will be covering that peer review topic in the next lecture. Same, it will be shortly uploaded on the schedule, so you will see that. Also, please provide your feedback. That is very, very important for me, because on the basis of that I will be able to understand what additional things I need to provide to you guys, and how it is going, whether any improvement, whether any change is required. So it's very, very important for me. Okay, so please provide your feedback. Yep, so that's it. Thank you for participating in the today's lecture. I'll see you in the next lecture with the peer review guidelines.